Hello guys, welcome to the Nexoel Trading Hub YouTube channel. I've been away for some while, but by the grace of God I'm back and you guys will be seeing more of the weekly Forex focus. So let's begin with the weekly Forex focus for the coming week, and this is the dollar index. We are starting from the monthly time frame. What we can see is we're having bearish momentum, but price have traded into this monthly bullish fair value gap, and the monthly bullish fair value gap have been holding price. Price have been failing to break through the monthly bullish fair value gap. We can see how price reacted at it, and we have volume close to both that. We had a bullish movement and price gave us a bearish movement back into the monthly bullish fair value gap. And this is the month of June candle, which is yet to be fully established. We can see how volume also was still trading now above the monthly bullish fair value gap. So if we're going to have the possibility of price respecting this monthly bullish fair value gap and giving us a bullish movement from the monthly time frame, the draw on liquidity now is this monthly bearish fair value gap. So I'm giving us the long-term picture to what may happen in the dollar index, but price then can violate the monthly bullish fair value gap. But what we can see currently is that price is respecting it. Even a lower time frame, we're beginning to see bullish structure and bullish volume. Then from the monthly time frame, this is the draw on liquidity. But in the lower time frame, the weekly, the daily, those are also higher time frame, but they are lower than the monthly. We could also see next draw on liquidity zone to anticipate the bullishness into. So let's check the weekly time frame. So here in the weekly time frame, what we can clearly see is that this is the monthly bullish fair value gap in which price returned here, retested, and we had a bullish movement into this weekly bearish fair value gap. And within this candle week, we have a daily bearish fair value gap. Hence why we can see we had deeper push to the upside into this candle week. So what we have now, this is the monthly draw on liquidity. If we would see the possibility of bullish movements, but we must understand that we are bearish in the dollar index. We can see strong bearish volume to the downside. So clearly what we have here is price created this liquidity void, and we can see how price returned, retested that, and we had the fall of price again to the downside. So clearly, since we are bearish, it means this is our external draw on liquidity, the sell side draw on liquidity to the downside. But now what we can see is that price is respecting the monthly bullish fair value gap. We can see how volume is closing above the mean threshold, the consequent encroachment of the monthly bullish fair value gap. So from the weekly time frame here, I can't really tell you what we may see in price, but looking at the fact that price here swept this low and volume closed above that, and now we are seeing a bullish candle that failed to take out this sell side liquidity, then we could see the possibility of a higher price before we have the possibility of price dropping to the downside. But then let's drop to the daily time frame to look at the narrative in the daily time frame. So here in the daily time frame, what we can clearly see is, I told us from the daily time frame, we're also going to see a fair value gap, a bearish fair value gap within the weekly candle week we identify and spotted out in the weekly time frame. And we can see that was why we had more higher price here. Price mitigated this daily bearish fair value gap, and we can see how price fell to the downside. Here in the daily time frame, this is the last buy candle before the sell movement to the downside, and we can see in the weekly time frame we identify a liquidity void. Price traded to the downside, and we had a pullback, and price returned to mitigate this again. So we can see now price give us the movement of price to the downside back into the monthly bullish fair value gap zone. So what we can see from the daily time frame here, we have relatively equal high points. We're going to drop to the 4-hour time frame to look more into that, and we have this liquidity void that I pointed out to us last week. We would see how price would react to it and give us bearishness. We could see bearish reaction here, or we could see price trade more higher into this daily bearish fair value gap, and we could see our bearish movement to the downside to the external range liquidity. But what we can see is that yes, price traded into that and gave a minor bearish movement, and then price went bullish into this daily bearish fair value gap. But what we can now see is the fact that price is respecting this monthly bullish zone. And now we can see we have this bullish volume and we have a relatively equal high points here. So if price doesn't continue bearish to the downside, then we could see the possibility that price would react at this daily bullish fair value gap zone. We could see price respect this. So clearly what I'm projecting is that we could see the possibility that price would continue bullish to aim for this relatively equal high points we have here. So if price is going to continue bearish to the downside, then we're going to see how price will violate this daily bullish fair value gap, and then it will serve as an inversion fair value gap, and we could see the possibility of price continuing bearish to aim for this external range liquidity, this sell side liquidity. So from the daily time frame, this is the narrative I am looking out for, but I would look at how price would give us a buy model from this zone with the possibility of seeing that price would aim for this relatively equal high points. Let's check the 4-hour time frame. So here in the 4-hour time frame, all we can see is the weekly void where price return again to retest the fall of price to the downside. Here we have the relatively equal high points. Price return to this breakout. This is the last down close candle before the bullish movement took this buy side liquidity, mitigating the zone, and price fell to the downside. Before price took out this low, we had this consolidation here, giving us this relatively equal high points. Price gave the bearish movement to the downside. So we can clearly see what happened here is the fact that price failed to take out the external range liquidity. Price traded to the downside, and then we had bullish momentum to the upside. So you can see that price is respecting that monthly bullish fair value gap zone. So here we can see we have this market structure shift, and now we have an inducement liquidity here, a sell side liquidity. We have impulse, price return, retested the fair value gap, impulse to the upside. So here we have the sell side liquidity. So I'll be looking at the possibility of what happens if price takes out the sell side liquidity. If we have in a lower time frame buy model, then we'd want to buy, and then we'll aim for first to see how price will take out this relatively equal high points back to this breakout zone, in which we can see this fair value gap is not yet fully mitigated. So we could see this movement, but then if price decides to go bearish, then we're going to see how price violates the zone, and we could see a retest, and we have the bearish continuation to the downside. So I'm giving us the two scenarios in the dollar index, because if you look at how price have been trading lately, there appears that you won't even see volumes, and most times when you have a rigid perspective, you could see price violate that. So what next? What do you have then to do? So I'm giving you the possibility of a likely interpretation or delivery we could see in the markets. So I'm giving you the two scenarios that is likely to happen, because we must understand that price is reacting at a monthly bullish zone, and we're seeing that it's giving bullish volume, and we have liquidity resting here. So price, now we can see price give us this fall, failed to take out the external range, and then we had bullish impulse taking out this high with volume closing above that, and we can see here that price also closed above this bearish fair value gap in the 4-hour time frame, which is also in the daily time frame. So this is what I have to show us, guys, in the dollar index, except price also decide to continue bullish from this delivery. So this is what I have to show us in the dollar index. Let's check out the EURUSD pair. Here in EURUSD, we can see the very opposite of the dollar index. Price mitigated this monthly bullish fair value gap zone, which was refined in the weekly time frame, and we can see the bullish momentum. So it means if price is going to go bearish in EURUSD, this is a long-term picture I'm giving us, please. The drawn liquidity is this bullish fair value gap here in the monthly time frame. It means we would see the possibility of price falling into the zone. That is the next draw on liquidity. If we see the possibility of bearishness in the EURUSD pair, a clear long-term perspective of a bearish movement. So this is a long-term picture I'm giving us, but we must understand that we are bullish. So let's check the weekly time frame. So here in the weekly time frame, what we can clearly see is, I have been pointing out this zone to us for the past few weeks, how we anticipated to see how price would come mitigate this, because we saw price create a relatively equal high point, and now we can see price mitigated that the first time, and then price returned into this weekly bullish fair value gap zone, and then we had this bullish movement returning into that zone again. So price is mitigating the zone again for the second time. Now we have the monthly bullish fair value gap zone as the probable next draw on liquidity if this zone is going to hold price and send price bearish to the downside for a long term. So what we can now see is if we're going to continue bullish, this is our draw on liquidity, this weekly bearish fair value gap. Price will aim for the buy side liquidity here, and we could see price trade into this fair value gap zone here. So let's check the daily time frame. So in the daily time frame, we can clearly see that we have the push of price to the upside back into the weekly zone identified from the weekly time frame. So this is the draw on liquidity, this weekly bearish fair value gap zone. So last week I identified this bullish fair value gap, which I shared in the free Telegram community in the chart markup, and I told us that we could see price trade into that and we have bullish reaction. So what we can see is that price have traded into that, and we can see how price is trading above the main threshold, the consequent encroachment of this daily bullish fair value gap. So we have this rejection block here. So it means if price is going to respect the weekly zone, because price returned to retest it the second time, so we could see price now give us bearishness in for this sell side liquidity to this rejection block, because in the 4-hour time frame we're going to see an unmitigated order block. So let's go to the 4-hour time frame. So here in the 4-hour time frame, clearly we can see we have the break of the structure. Price return first into this bullish fair value gap in the 4-hour time frame, which we can also find in the daily time frame. And then we had this bullish movement that took out the external range liquidity, volume closing above it. So you can see that zone we marked from the daily, the rejection block. We have this 4-hour bullish order block, took out sell side liquidity, sponsored bullish movements, breaking this high. So what we have is pool of what trend line liquidity resting here. So we have this trend line liquidity, and clearly what you can see again is the fact that price have returned into the daily bullish fair value gap zone, and we have price giving us this bullish order block. So don't forget, price is reacting at a supply zone from the weekly time frame, and price gave us this movement to the downside, causing this market structure shift. Return into this bullish zone from the daily time frame, now giving us this movement to the upside with the possibility of giving us a market structure shift here. So I'm just going to give us the two scenarios that we could likely see in the Euro USD, just the way I pointed that out also in the dollar index. And I'm going to point out this possibility because of how we've been seeing price delivering lately. So what we can see is this is the 4-hour bullish order block within the daily bullish fair value gap. So if I'm bullish, I want to see how price will take out the sell side liquidity. I want to see price respect the zone, gives us a clear buy model, and then I want to maintain a bullish movement of price to the upside. But then if price decides to trade higher into this supply zone, we can see here from the 4-hour time frame, and we have price failing to continue bullish, and price decides to possibly, it gives us a sell model, returning to this zone here, this order block, and violating the order block, then I know I'll be going bearish to the downside. So this is my expectation in the Euro USD pair, the possibility I'm looking forward to. If price respects this bullish order block, meaning I want to see how price return here, the possibility of price returning here, and we continue bullish to the upside, or we could see price trade higher into this supply zone here. What we have is the displacement of price, fair value gap, price return respected that. We had bearish impulse giving us this market structure shift because of the reaction from the weekly zone. And then we have price return here and violate this bullish order block. Then I'll be looking forward to see how price will take out the trend line liquidity we have here. So this is all I have to show us in Euro USD. So let's check out the GBP USD pair, guys. This is GBP USD from the monthly time frame, and we can see the bullish movement of price also in GBP USD. Price returned to this key level, and we had the push of price to the upside. So if we're going to see the possibility of bearish movement from the monthly time frame here, what we can see is this is the draw on liquidity, this monthly bullish fair value gap zone that price may aim for when we have the return to the downside, meaning this is our internal range liquidity. Price is taking out this external range liquidity. What we can see is that volume here traded to the upside, took out this buy side, but we can see how volume traded back to the downside. So the month of June candle is yet to be fully established. So let's check the weekly time frame in GBPUSD. So here in the weekly time frame, we have price return to the supply level. We have this bearish fair value gap here in the weekly time frame. Price mitigated that, filled that up, and we had this bearish movement, but then we have price again return into that zone, and now we can see this bearish movement. So if you've been following us, we've been making all of these projections: return to the fair value gap, bullish continuation, return, bullish continuation. In the free Telegram community, I shared the chart setup for the weekly perspective, where I said we could see the possibility of price returning into this weekly bullish fair value gap, and we could see bullish reaction. So we can see that price is reacting at the supply zone, and price have also returned now to this weekly bullish zone, this weekly fair value gap. So we can see how price traded to that, volume closed above that. So what we have here is the movement of price at this supply, and now price also now reacting at this demand. Yes, we are what? Bullish. But just the way I gave us the narrative from the dollar index, the possibility we could see, because the dollar index is reacting at a monthly demand zone. So we could see price gives a bullish movement, and then before we have the resumption to the bearishness. So it means that they would have an effect on the EU and also the GU. So that is why I'm giving us two perspectives for the coming week. So here we have that price have traded into this bullish fair value gap in the weekly time frame, and volume closed above it. So volume have closed above it, so our possibility is to see that we could just have bullishness to the upside. But then let's go to the daily time frame. So what we have here in the daily time frame is how we can see this is the supply level from the weekly time frame. So we have price failing to really continue bullish to the upside, so price have swept this high points, and then what we can see is this displacement that took out this low point, and volume closed below that. Price created a bearish fair value gap here in the daily time frame. Price traded into it on Friday, and we can see rejection, meaning price is respecting the mean threshold. So for the GBPUSD, I might have to wait to see the delivery on Monday. That would further gives us the clear picture of where price would head to. So what we have is the fact that yes, price took out buy side. We have liquidity sweep, displacement to the downside. Price took out this low, volume closed below that. But now we are having price reacting at this demand zone, this weekly bullish fair value gap. Price also reacting at a supply zone. So this is quite trickish. Let's check the 4-hour time frame. We are in the 4-hour time frame. Last week I told us to expect to see how price, if price doesn't continue strongly bullish from this order block, where we saw also this took out the sell side liquidity, and we had this engulfing candle. So we can see we had a short-term bull movement, but then price went down. I told us we could see price aim for this trend line liquidity into this weekly bullish fair value gap, and we could see the bullish reaction. Now clearly we can see we have the bullish reaction here. So we can see that price has given us a market structure shift here into this fair value gap, respecting the mean threshold. So what we can see is price reacting at a supply zone. Now price have returned to the demand zone, giving us a reason to want to go bullish. So what we have to see is we could look into the 15-minute time frame, the 1-hour time frame, and then we would want to really see a clear reason to want to buy if price is going to continue bullish. And I won't extremely just go bullish aiming to see price takes out this buy side liquidity. So I would be bullish to the possibility of price returning to this supply zone. So I would have to wait to see what happens at this supply zone also. Or you could trade and then you'll be trailing your stop loss to see the reaction of price here if price is going to go bullish. So because we could see the possibility of price returning to the upside, we could see that possibility that price may trade to the upside and gives us a sell model for price to fall to the downside here. Here we have this zone we marked from the daily time frame. Let's check that from the daily time frame, meaning if the market is going to go bearish to the downside, meaning it might fall to this zone here where we have this consolidation before the bullish movement that took out this high points. So back to the 4-hour time frame, that is what we may possibly see. So it means that I have this zone for a bullish perspective. So whatsoever violates this zone, if price violates this zone, possibly with a movement now, and price decide to violate this zone, then I'll be looking forward to a bearish movement to the downside, and then see how price reacts here. If price is going to give a bullish reason, or we could see further fall to the downside. But then this is all I have to show us in GBPUSD. This is my perspective. If price gives a clear bullish reason here in a lower time frame like the 15 minutes, I'd want to trade bullish to this supply zone, trailing my stop loss to see if price is going to continue strongly bullish to the upside. Or we could have price now trades bullish to this zone, and we may have price gives a bearish reason to the downside. So these are the scenarios I have to show us. So I'm showing us this scenario because of how market has been behaving lately, so that we have open mind. We have to be flexible. So price here is currently reacting at our demand zone, the weekly bullish fair value gap, and we're seeing the possibility that price may give us bullishness. But then we have price reacting at a supply zone here. Swept buy side liquidity, give this displacement to the downside, taking out the trend line liquidity. So we have price return into this bearish fair value gap, price now returning to the bullish order block. So if we have a clear buy model that we want to buy, first I told us we'll be aiming to see our price trade into the supply, because price may decide to go bearish from the supply to the downside. So basically it means you'll be trailing your stop loss to see how price would trade higher. If price violates this, you're still in the position by trailing your stop loss. Then we continue bullish. And then if price then violates this immediately, and then we could see price trades to this zone, and then we have to wait to see what happens here. If price gives us a bullish reason from this zone, then we go bullish. So this is what I have to show us in GBPUSD. I'm not giving us a specific bias because of the behavior we've been seeing lately in the markets. This is BTC, and this is from the weekly time frame. So what we can see is price took out this external range, return to the internal range, this fair value gaps, price mitigated this bullish fair value gap, and we have bullish movement. What we can see is that price swept this high points. So we have this buy side liquidity sweep, and we can see that now volume is trading to the downside. So clearly what we can see is after the mitigation of this bullish fair value gap here in the weekly time frame, we had this bullish movement. Price took out the sell side before continuing bullish. We have unmitigated breakout. We also have this bullish fair value gap, and we have this bullish fair value gap here. And we have the sweep failing to continue bullish. So it means we're having price being attracted to the internal range liquidity. And the internal range liquidity, we have this fair value gap, this, and to the downside, unmitigated breakout resting here. So we could see the possibility of what more downward push of price to the downside in BTC. But we have to look at the most recent draw on liquidity, which is this weekly bullish fair value gap we're having here. So I want to see further push of price to the downside here, the possibility of what further push of price to the downside. This went to the downside, taking out all of the sell side liquidity, but then price went above that, took out the buy side. So we could see price aim for this candle that took out all of the sell side liquidity, and price will take out the sell side because we also have this weekly bullish fair value gap here to the downside. So I'm expecting more bearishness to the downside here in BTC. Let's check the daily time frame. So here in the daily time frame, what we can clearly see is from the weekly, we know this is a sweep of this high, though what we can see here is a break of that. And clearly now we have liquidity resting here. Price came, swept that liquidity, but price went to the upside but failed to continue bullish, price respecting the supply zone. And now we're seeing the possibility of what further bearishness to the downside, and we have this unmitigated order flow. So what we have is price gave this movement to the downside, creating a bearish fair value gap. Price return mitigated that, fell, and we can see how price return retested that, and we're seeing bearishness. So for BTC, I'm expecting more bearish movement to the downside into this zone here. So what we have is price reacting at this rejection level, this support level here, because when you change that to a line graph, you have this level here. So price may react here to give a bullish movement before we have the fall. So if we are bullish, clearly we just have this unmitigated weak. So it means we may just see price trade high here to mitigate this, and then we have our fall further to the downside. Price reacted at this bearish order block, fell to the downside, into this level here. So what we have is the possibility that price may just want to trade higher to mitigate this week, and we have the fall. Or we could see the continuation of a bearishness to the downside. So we could look into that in the 4-hour time frame. So here in the 4-hour time frame, what we can clearly see is we have this rejection block in the 4-hour time frame, and price traded into that rejection block zone, and we are seeing this possibility of a bullish movement. But the bullish movement, what you can clearly see is that price is respecting this bearish fair value gap here. So it means if price violates that bearish fair value gap and trades higher, then we could see price give us this movement, retest into this bearish fair value gap zone here we have, which we marked an unmitigated week in the daily time frame, and then we could see price give us a sell model to continue bearish into this zone. So I'm looking at small bearish possibility in the BTC. So this is what I have to show us guys in BTC. This is gold and this is a weekly time frame. So what we can see is how gold returned to react at this weekly bullish fair value gap, and we had the bullish movements. The drawn liquidity is the buy side, the external buy side liquidity resting here. So what we can see is the possibility of a bearish movement will mean the return of price to mitigate the volume of this down close candle before the bullish movement to the upside. This return reacted at this bullish fair value gap, and we had the bullish movements. So what we can see is we have a down close candle for last week. Price took out this buy side liquidity, volume closed below, took out also this buy side liquidity. So clearly from the weekly time frame, we can't really point out the direction, but all we know is that gold is bullish. So we could see bullish continuation to the external range, or we could see price dip lower to the downside. And if price is trading to the downside, we're not seeing prices immediately dropping to the zone. But what we have is this unmitigated candle here. This volume is unmitigated. So we're looking at the unmitigated zones. So let's check the daily time frame. So what we have in the daily time frame is this. We can see this is the weekly bullish fair value gap. Price dipped into the daily, and we had the bullish movements to the upside. Price created this structural delivery, return, seek this sell side push, return, mitigating this daily order block, a push to the upside. So from the setup I shared in the free Telegram community for the weekly projection, I pointed to the fact we have this daily bullish fair value gap. So we could see price drop into that, and we have bullish reaction. But clearly what we can see is the delivery in gold last week was just so choppy. It was quite crazy. So what we have is we can see the movement back into the bullish fair value gap, but there is no momentum to the upside. Though we can see that volume is still trading within the daily bullish fair value gap. We're having rejection to the upside, but this doesn't clearly mean we might see a bullish impulse immediately. But the delivery thus far is the fact that price have returned into the daily bullish fair value gap. So we're not seeing bullish volume. When we go to the 4-hour time frame, you're going to clearly see what I'm pointing out to. But then we have that price here, volume is failing to close below the daily bullish fair value gap. So this is the external draw on liquidity. So if price violates the zone, then we know we might see the possibility of price heading more lower. But then let's look at the 4-hour time frame. Here in the 4-hour time frame, what we can clearly see from the 4-hour is this is the daily bullish fair value gap zone I marked from the daily time frame. So we can see how price then for the return to mitigate this order flow before we had this bullish impulse, for the bullish impulse that broke this high. So it means that if we're going to go bullish, what we can clearly see is the fact that now price mitigated this zone. We have this bullishness to the upside, but clearly price have not violated this up close candle before this bearish movement, and this is clearly the valid high points. If we're going to see bullishness, it means price should take out this high points. So clearly now from the 4-hour again, we have this bullish fair value gap zone in which price just mitigated the high of it. So if we are going to see bullishness, then price should respect this zone, and we may see bullish model, and then I'll be trading bullish to the zone, because what we can see is this is an unmitigated week, so I might see price trade into that. So this will be the first target if I'm bullish. So I'll be trailing the stop loss to see the possibility that volume might be present and then further push price to the upside. So if I'm bullish, this is what I'll be looking out for to see how price reacts within this zone. If price gives the clear buying model, then I would want to start buying gold to the upside to see price now create a clear structural market structure shift here. It means if price further push and volume close above that, they want to see a pullback. I want to see price gives fair value gap and a pullback, and then we have the push of price to the upside. So having an impulsive movement here that would give us fair value gap would mean that we have the possibility of going bullish to the upside. So in the 1 hour time frame, we're going to find out that we have an unmitigated supply zone here. Let's check the 1 hour time frame. So here in the 1 hour time frame, you can clearly see that the week we marked from the 4 hour time frame, we had this 4 hour fair value gap, price return mitigated it a little and then dropped. So you can see we have pool of what liquidity resting here. So we can see here we have the push of price to the upside. Price failed to continue bearish to take out this low point. We have this impulse. So we have, this is the valid high point. If price takes out this high points here, then we have a market structure shift. We want to see the possibility of bullishness to the upside into this zone. And then if price decides to continue more bullish, then we write more bullish with price to the upside. So what we have is we have this internal market structure shift. So we could see a pullback. If price gives us a buy model within this fair value gap, then we want to buy to the upside. So this is the first drawn liquidity, and then we have this pools of liquidity resting here. So let's check the 4 hour time frame again. If price decides then to continue bearish to the downside, it means price is going to violate this. So we're going to see the violation of the zone, and we have price return to retest that, and then we'll see price falls to the downside to the zone here because the volume here have not been mitigated. And whatsoever violates this zone, it means price would aim for all of this liquidity. So this is what I have to show us in gold. So the violation of this would mean that we could now start seeing further bearishness to the downside. So cheers guys, and God bless you all till I come your way next week.